Okay, now continuing with the main part of national income numerical, that is methods to measure national income. This is very important for 6 markers as well as 3-4 marker question. Now we are passing on with the next methods. Now children, here also you have to remember all these short forms that are shown in the slide. First one is national income, which I have informed it earlier and you have already learnt it. National income is NNP at FC. Then you have to remember we'll do this national income by 3 methods. Income method, its short form is NDP at FC, which is also called as domestic income. Second one is expenditure method, which is GDP at MP. Third one is value added method, which is also called as product method. Its short form is again same only, GDP at MP. So 3 short forms you have to learn and remember: national income NNP at FC, income method NDP at FC, expenditure and value added method has same short form, that is GDP at MP. Now first one, let's do the first set of formula of methods to measure national income, that is by income method. Short form for income method is NDP at FC. Now what do you mean by this income method? According to this method, we are going to calculate all the income that are received by different factors of production like land, labor, capital and organization. The remuneration that these factors of production receive may be rent, wages, profit and interest. Addition of all these income together called as income method. Now, short form for income method, as I said, it is NDP at FC. There are 3 main components for NDP at FC. First component is compensation of employees. In short, you can remember it as COE. Second component is operating surplus and third component is mixed income. I'll repeat again. NDP at FC is equal to compensation of employees plus operating surplus plus mixed income. Now let us try to understand in detail about each component. First component, that is compensation of employees. Before proceeding with this, you have to understand the difference between an employee and an employer. Employee means a person who works in any institution. Then we call that person as an employee. The second one is employer. Employer is the person who hires employees or who gives opportunities for people to work. We call that person as employer. So this is the first important point what you have to remember. When we speak about compensation, here employer may sometimes give compensation to his employees in the form of monetary benefits or in the form of non-monetary benefits. Now there are 3 subcomponents under this first main component of compensation of employees. 3 subcomponents are: number 1, wages and salaries in cash, that is monetary benefit. So it can be salary given by employer to employees, wages, bonus, commission, dearness allowances. All these are monetary benefits given by employer. Second one, it can be in terms of non-monetary benefits. Maybe employer can give housing facilities, car facilities, education for his children, medical facilities, maybe maids, maybe food for lunch. All this can be provided at free of cost by employer to employees. Then this is what we call it as non-monetary benefits. Now third one is employer's contribution to social security schemes. Now when we say social security schemes, it means the employer also ensures the safety and security of life of employees. Then we call it as social security schemes, which means other than monthly salaries, bonus during festivals, he also gives benefit after retirement of the employee. Then the benefits given are it can be pension, provident fund, and gratuity. We call them as social security schemes. Moving on with the second main component, that is operating surplus, OS. What do you mean by operating surplus? It means income from property and entrepreneurship. When we say income from property, what are different types of properties? A person can have land, he may have building, he may have shops. All these are properties for him. Now what he will get from that property? He will get rent. So the first subcomponent for property is rent. Second one is royalty. Royalty is the amount that is received for subsoil assets. Now what do you mean by subsoil assets? It can be like iron ore, it can be natural gas, mineral deposits, etc. Now these subsoil assets are or it belongs only to government. Okay, all subsoil assets normally belongs to government. What government will do is it will lease out these subsoil assets, or it can put these subsoil assets for auction, and the person who is taking this has to pay a lump amount for using this asset for a particular period of time. It can be for 2 years, 3 years. So the lump amount which the party purchases from this auction has to give it to government, and that lump amount is called as royalty. Now third one is about interest. Now interest is the amount received for lending fund to production purposes. Any person lending money or lending capital for production purposes to others, then he will get interest for the amount that he has lent. Now this is also considered as property. So property is equal to rent plus royalty plus interest. Second part is entrepreneurship, which means an entrepreneur. And as you know, in business studies, you might have learned about entrepreneurs, so I'm not explaining in detail about it. Entrepreneur, he gets profit. What will he do with his profit? He has to use this profit for three important purposes. First, what he will do is he has to pay tax to government. Then he has to pay dividend to his shareholders. Third one is he has to keep certain amount as reserve for expansion of business or for unexpected emergencies. So for these three purposes, he will first keep certain part of his profit and remaining amount he will use. Now it is called as, so the first one is corporate tax. Corporate tax is tax paid to government, then he has to give dividend. Dividend is called as distributed profit. Dividend also called as distributed profit. Now the third one, that is retained earnings. Retained earnings is undistributed profit. We also call it as savings of private corporate sector. What is it, retained earnings? This is the amount that is kept as reserve for any emergencies. So profit is equal to corporate tax plus dividend plus retained earning. Now how will you use this in your question is, in case if profit is not given, these are subcomponents of profit. So you will add corporate tax plus dividend plus retained earning. What you get will be profit. Now the last one is mixed income, that is the income received by different people for their self self services. For example, shopkeeper, he runs his own business. He has to get his income from the from the work that he does. Then all this together, like it can be doctor having his own clinic, he has to generate income by his own. And farmers and cobblers, all this together called as mixed income. Mixed income. Now finally, to say about about income method, NDP at FC is equal to compensation of employees plus operating surplus plus mixed income. Okay, now that's all with the first part of income method. Thank you. If you have any questions, you can contact me in my personal window.